Bitcoin fell by over 2% yesterday, setting a new low to $57,128 on the USDT pairing. This changes a few things, so we're going to spend a little bit of time today jumping into the technical analysis on Bitcoin, sharing my thoughts and opinions on the 1 hour and 1 day timeframes. As I get into today's video, smash that like button if you are new to the channel, subscribe, and let's jump right down into the charts. So here we have Bitcoin paired up with USDT on the 1 hour Binance chart. You can see that there was actually a fair chunk of volatility yesterday. This is something that we've been talking about for a while, essentially with the pumps, the dumps, the liquidity extraction. Here on the hourly chart, you can really see how much of that has occurred. For example, you can see that we had the move to the downside, moves to the upside, to the downside, to the upside, to the downside. And basically the price is just bouncing around from the low liquidity pools to the higher liquidity pools, basically liquidating leverage positions and taking advantage of buy order blocks on the low sides and the high sides. Okay, so as we take a look at the price action of XRP here, we were originally hoping that we'd see a breakout above the 50 EMA, 50 SMA, and we'll be targeting out that 60,062 to 60,494. That's no longer viable because we didn't get a breakout above these 50 EMAs, 50 SMAs. This was not something that was going to go on. We're looking for a retest of the 200 EMA as we had done and seen previously on the 29th of August. That is not going to happen here under this current structure. That's not to say that we can't get there under a new structure, but the current patterns that we're seeing inside the data here basically says that's no longer viable. Our lower range expectations, which were down here, has finally been hit. Okay, so this was the 56,714 to 57,526. This is a part of a bigger picture that we were looking at, and we were looking to come down into this lower range, and we finally got there. Now, does that mean that we are done with this low? Not necessarily, because the recent rejection that we saw of the 50 SMA yesterday, just up here on these high candles at 58,788, basically is indicating to me that we still have a little bit more room to the downside here. I don't think we are done. This is an indication of a 5-wave move, possibly that we kind of maybe finish that. So to check it, we'll go to the 15-minute time frame here, and we'll just check to see what happened right inside here. You can see we kind of did see a little bit of a push to the upside. Take it to a 5-minute time frame just to see where that goes. A little push to the upside and then a push to the downside. But this doesn't constitute a finished structure, in my opinion. If we go ahead and measure the distances from the low to the high here, we have I don't think we've kind of let me just check it. Grab hold of this one here and just pull that across. Yeah, we kind of failed to reach 1.236, which is the area that you would normally expect things to go. And there's lots of overlapping nature within these candlesticks here. So I don't think we're done just yet. So bring this back to the hourly. That means that this is probably a wave 4 situation before we get into the next move to the downside. Okay, so we should be thinking there's going to be the potential for a move down to the lower side of our range here. So 56,736 to 56,978. Now that gets broken, or the idea of that gets broken, when we start coming up a little bit higher. Come back to our 5-minute chart just so that we can see where that sits. I would be looking at I'll be looking at this low down here to kind of be the kind of break of structure range at $58,093. Bring this back to our hourly chart. So if the price goes up higher than $58,093, then of course we can say that we're not going to do this. Failing to do that, of course, means that we are more than likely going down to 56,736 to 56,978. So shorting opportunities are here. Now, is it worth shorting? Let's have a look. So obviously I'm looking for 1.5 risk reward ratio. We'd want to see reversal. We haven't seen reversal just yet, but let's hypothetically say it was just at market value right now. Our stop loss would have to be higher than 58,093, and our take profit is going to have to be on the 1.236. The risk reward ratio is just short of the 1.5 that I would like. So this isn't an ideal situation. It pushes the boat a little bit. We might be able to kind of just edge it by saying take profit would be 56,968, entry at 57,657. Obviously, if we move that up, we'll get there. So it is possible for a short position. Personally, I think we are probably better off waiting for this structure to play out and then go long rather than go short. But we'll see how that kind of plays out on the next little while here. Now, obviously, we hit the targeted range. This is a part of a bigger, broader picture, and getting there wasn't easy. Taking a look at this, we could still be looking for a diagonal pattern within our structure here of a zigzag pattern. So it's still a little bit more to the downside to complete. But we kind of see that progression has been made. If we measure the distance on this, pull this in, you can see, yeah, we're right inside where that kind of range of expectation would be on that zigzag. So a little bit more to the downside, I think, and then we should be good for a little bit more of a push to the upside, trying to find that 200 EMA and whether or not we can get above it here on the hourly chart. Our stochastic RSIs are heavily oversold now on the weekly, daily, and 8 hourly. So we are going to be looking for recovery soon, in my opinion. It won't happen just yet, but I think we are getting somewhere close. If we turn off the stochastic and bring on the relative strength index, you can see there was bullish divergence yesterday at 2300 hours. So that kind of comes in line with the idea that we're about to see this little move to the upside. But for the most part, that's about it, really. I don't think that's going to be long-lived, but I'd like to be wrong on that. So relative strength index and the divergence indicator looks okay, but we are still lower than the 50 level. So if we are to see a big break, we have the bullish divergence, we might be able to. If I wanted to go long based on that, I probably would have done it by now after that first kind of double green candle, but it's not the end of the world. We probably would be able to go long if we really wanted to. I just don't think it's really the one to do just yet. I expect another shakeout of the long positions before we get into the bigger breaks to the upside. If we bring the volume profiles in, as the price moving up, volumes are dipping down, so showing weakness in this move at the moment. So we'll see if that's sustainable or not, but volumes are a very interesting kind of thing to look at. Okay, so from the hourly chart here, Elliott wave theory is kind of telling us that we are still heading down. If we throw on smart money concepts, we can see here that we are still in bearish times on this one. There's still some pockets of resistance in here for sure. We can see there's some really interesting areas where we got rejected yesterday as we kind of see that move to the upside. But yeah, we're kind of progressing quite nicely. I don't think there's terribly too much to talk about in smart money concepts on this particular video, on the hourly chart here. So let's roll it up into the daily time frame. The daily time frame is going to give us a bigger picture as to kind of what's going on. Now, obviously, we were talking about this area of expectations that we've come down into, not yet finished just yet, in my opinion. This kind of is the idea that we were impulsive here. We know we're not impulsive, but it gives you that idea that we were impulsive. So you kind of see this kind of lining to maybe some people's ideas as to kind of where things are going. The downward trend line turns to support potentially, and we'll look for the break. Now, I know anyone who's kind of been watching some of these videos for a while now will know that we are looking for that retest of that kind of 62 to 63 area pocket of resistance. You can kind of see it right in here and pull that across. 61,685 to 62,745. This is going to be an interesting retest area, and we're going to see whether or not we can get past there. The 200-day EMA is currently sat at 59,558, so that's going to be the major area of resistance. And obviously, as I've said many times before, I do like to trade breakdowns or breakouts, and here we kind of saw this kind of area. In fact, it was on the 31st of August, which was the confirmation candle for shorting on the market. We would have gone short right about here, and we would have essentially just about put the stop loss above the previous swing high, and we would have targeted out our targeted range here on a 1.5. And you see this trade on the daily time frame would have played out within about 2 to 3 days of actually activating, and that would have been a fantastic trading opportunity. Okay, of course, trades like this I do on 𝗕𝗘𝗪𝗏, and occasionally at times I have to use other exchanges such as 𝗕𝗘, depending on the kind of cryptocurrency that I'm trading. But my go-tos are 𝗕𝗘 and 𝗕𝗏. If you can't get a 𝗕𝗘 account for jurisdictions reasons, go ahead and check out 𝗕𝗏. It's non-KYC, so if you put one of those kind of individuals who doesn't want to kind of do the KYC process, check out the link in the description down below for 𝗕𝗏. It is a non-KYC exchange, and again, plenty of leveraging opportunities to be done there. Some great trading pairs as well. So I use 𝗕𝗘 and I use 𝗕𝗏 primarily, and I use 𝗕𝗘 occasionally if there's an asset that's not on any of those two. So my personal preference, guys, is to set up accounts on all of them if possible, because then you get the best of all of the different platforms. So check them out. Links in the description below. There's some exclusive sign-up bonuses and discounts available if you use those links in the description. And if you join us on our Discord server, well, you've get extra benefits if you sign up with those links. So check it out. So yeah, on the daily time frame, it's looking very, very interesting. If we go ahead and take a look here and bring in our smart money concepts, you can see that this is a pocket of buying area. So we've come down. Yes, it's bearish. We're obviously lower than 200-day EMA. We're obviously lower than equilibrium, but we are in a pocket of buying, which is basically what we had seen previously with consolidation in this range. So we're going to keep a close eye on this and see whether or not we are able to kind of break out, or whether we see continued break to the downside. But as I said, we're already in the oversold territory. We're about to cross the yellow line here. This is the stochastic RSI. The white line is the smoothing of K. It's a glorified moving average of the stochastic RSI. And when these cross, it shows bullish momentum shifting. So the last time we saw this was on the 5th of August. And guys, do I need to tell you what happened on the 5th of August? No, I don't. So ultimately, we can see that momentum's about to shift. We're about to have that breakout. I expect a little bit more to the downside, and then I think we're in the opportunity for a long position where we target out to go back towards $61,000 to $63,000. And if we can get a break above all of that, there's the idea that we even test up as high as $70,000. So the next big move for Bitcoin here is essentially a long position, in my opinion. A bit of a break to the upside, and yeah, we have that ability to see that on the daily time frame. It's not going to be a perfect entry if we're just to enter a long position here on the daily time frame right now, because I do think we can snipe a better entry on the smaller time frames. But the market is getting ready for a big run to the upside, in my opinion. Bitcoin is likely to have a breakout in the coming days, if not weeks. So one to keep an eye on. Obviously, a lot of people are speculating that September is going to be Rectember, basically going to be downward price pressure, but I actually expect it to be both. I expect us to pump up and then absolutely tank on the kind of latter part of the month. So first beginning couple of weeks of September, I think we're going to see a surge, follow that by a massive dump to the downside from Bitcoin and altcoins, essentially. So for the most part, everything's kind of going along as expected. There's nothing terribly too unusual. Obviously, we saw a continuation of the downward price pressure. We didn't get the breakout that we were looking for on the 50 EMA, 50 SMA on the hourly charts, and the daily chart is starting to kind of show signs that we might start to see a bit of a break to the upside with some bullish divergence on the smaller time frames. Larger time frames heavily oversold, and yeah, we are starting to kind of gear up for those next big runs to the upside with bullish momentum shifting. You guys can let me know what your thoughts are on all of this in the comments down below, and if you haven't done so yet, check out my second channel just here where I go through the Cardano technical analysis every single day.